Hey guys, John with TRD Trader here. So I'm coming in with, I got a two for you today. I'm going to review the performance of my calls from last week, and I'm going to go over my calls for the next week. But before I do that, I want to go over something for you to be mindful of. If you've been paying attention to my videos, you know that I usually make these videos during the weekends. And, I work a full-time job, so I don't really have time to do them during the week. So one of the difficult things about trying to, make calls about what levels to sell puts at during the weekend is you don't yet have access to the market information that's occurring throughout the week. So if market conditions drastically change throughout the week, I don't have the time to come on and make a video to warn my subscribers about things that are happening in the market. So with that being said, if I make calls during the weekend, it obviously can encompass all of the possible outcomes that could happen throughout the week. So for example, a couple weeks ago, I would have made calls around this area during the weekend, and then around the 13th, if my mouse will work, around the 13th-ish, this is QQQ, which is the NASDAQ. Let's see if it corresponds with the other. Yep, around the 12th for the S&P 500, same thing. And around the 12th again, the 12th or the 13th, Tuesday of last week, for the Dow Jones, the S&P 500, and the NASDAQ. All of them went drastically down because of COVID Delta variant fears and inflation fears, higher interest rate fears. And so that's obviously something, even though I had made my plays, I wouldn't have had to have the time to come and make a video midweek to tell you about this stuff. So I do want you to be mindful of there could be activity that happens midweek that would change how I view a play. But because of my time limitations, I don't always have the time to make a video about it. So to some degree, you do have to be mindful of what's happening in the market. That being said, these falls weren't that bad, because if I got stuck in stock, which I did, I turned around and I'm selling calls until the stock can go back up, and I'm making about 0.5% to 1% average on the calls. So I'm still making money, and I'm riding the stock up till I can get out of the position. But yeah, my money is stuck in stock temporarily. Good thing I don't need it, but to be mindful of the fact that, there is the possibility that you could temporarily get stock with stock for 1 to 2 or 3 months at a time until the price can go back up. Now, that being said, let's go ahead and review my performance for last week. Here are the calls I made last week. Give me 1 second. So here, my mouse is a little fidgety. Here are the calls I made last week from 7:19 to 7:23. You'll see, because of the market dip, I went a lot more conservative before the market dip, and even a little bit after the market dip. I was still chasing 1 to 2% returns, but the market was falling so quickly, I was getting stuck with stock that was falling. And so now for the calls that I've been posting, I've been trying to focus less than a max of about 1%, and usually less than that, about 0.5% to 1%. And you'll see that with my cutting back on the aggression of the weekly return, I've gotten to a point now where there's been enough space between the fall of the stock and the floor I'm predicting that none of the options got called on. So if you made any of these plays, if you sold any of these puts in the last week, these are all puts that you would have made money free and clear on. So we had Blink. I gave 2 options for Blink, 2 options for Fubo, 2 options for Marathon, 2 for MVIS, 2 for Riot, 2 for Workhorse. And the rate of returns, they varied between 0.38% or 1/3%, all the way up to over 1.5%. So just with these week's plays, if you had gotten in on these week's plays, if you had parked your money on one of these puts, you would have made more money in a week than you would have gotten in a savings account for probably a decade. So this is one reason why I don't like keeping my money in a bank account. I like keeping them in my brokerage account, which is insured up to something like $150,000 or $200,000 if it's in cash, and I can make these 1 week plays where I can get 1 to 2% return. So these are the plays that if you had gotten in on, you would have made money. Not a lot, but you set your put. Takes 5 minutes to set your put. You forget it for a week, and then you just collect 1%, 0.5% to 1%. Now let's go into the plays I'm calling for the upcoming week. Good thing about the market, it's fallen pretty far, so hopefully, I don't know that we're at our bottom, but hopefully it is near its bottom, at least for some of these stocks. I believe they're near their historic bottoms, where they'll find a strong level of support and they won't break it back. They'll bounce off that level of support. They'll bounce off it, but they won't break through, and hopefully they'll bounce off it, and then as the market gains confidence, they'll go back up. The ones I'm highly confident on, I colored this dark green in terms of being near their historic floors. And I gave you a lot more options of puts this time. I gave you Academy, Smith & Wesson, Blink, EXPI, Fubo, Gevo, Halliburton, Marathon, Microvision, Riot, Six Flags, Tupperware, Viacom, Workhorse. Academy is a merchandiser. They sell outdoor goods. Smith & Wesson is a gun manufacturer. Blink is EV charging. EXPI is online real estate. Fubo is streaming. Gevo, I forget what Gevo does real quick. Gevo is renewable energy. Halliburton is oil. I think they're mostly, mid-channel distribution and whatnot. Marathon is cryptocurrency. Microvision is like sonar, radar, automation, technology. Riot is cryptocurrency. Six Flags is theme parks. Tupperware is manufacturing of kitchen goods. Viacom is cable networks and telemedia industry. Workhorse is EV truck manufacturing. So you'll see that I gave you various percentages of return because I believe we're closer to our floor. I'm upping up the aggression a little bit, but not as much as the 2 to 3% that I was trying to go for before. Now it's ranging from a good 0.75% to 1.25% return. You'll see the lowest here is 0.5%, and the highest here is 3%. And like I said, these green ones are the ones that I believe were closest to our floors. So our strike price for ASO is 35. Our strike price for Smith & Wesson is $22.50. Blink is $30. EXPI is $30. Fubo is $24.50. Gevo is $5. Halliburton is $19. Marathon is $21 and $21.50. Microvision is $12 and $13. Riot is $23. Six is $37.50. Tupperware is $18. Viacom's $40. Workhorse is $9. So just to kind of, this mouse is not working very well. Okay, so just to kind of go over some of these stocks that I think were closest to our floor. Let's go over Blink. Let's go to the charts. So for Blink, we have a strike price of 30. So here's 30 right here, right? And you see that in the last 3 months, it's only been below 30 for about a day, right? So about 2 days, only 2 days it was below 30. And then if we go out to the 1 year chart, 30 is right there. So right here, it bounced off support, bounced off resistance, broke through resistance, and then ever since then, the resistance of 30 has now become a level of support. And so 30 is a pretty solid floor for the long term. There's only, like I said, going back, it's only been below 30 for about, 2 or 3 days. And then, if you get stuck and it bounces back above 30 for 2 or 3 days, you just sell your stock, right? So 30 is a pretty solid floor. Let's look at GVO. For GVO, I had $5. You'll see that pretty much almost the entire time of the stock it's been above $5. The only time it's been below $5 was back here when it first IPO'd. It broke through resistance, and ever since then it's been above $5. And now that resistance of $5 has now become its level of support. Marathon. That is not the right ticker. MAR. Marathon. Marathon, the most conservative, I have $21 as a level of support. You'll see that here is about $21. There's $21 for pretty much the entire life of the stock. This doesn't include before IPO, right? But after IPO, after there's been growth, it's pretty much been above $21. The one time it was below here, so here, bounced off resistance, broke through, bounced off resistance, broke through. It dropped to below 21 for about a month. For about 2 weeks. Yeah, so for about a week and a half, it bounced through 21. Then it bounced off that 21 level and went back up. So for the most part, 21 seems to be a pretty solid floor. That it was once resistance, now it became support, and it just bounces off the 21. And for the last one, Microvision, I called a more conservative 12. So here is 12. You'll see for the most part, except for the fact that when it first IPO'd, found resistance, broke through resistance, bounced off 5, and then it kept going up, and 12. So yeah, it broke through resistance of 5, then 5 became its level of support, and then it broke through resistance, and ever since then it's been above 12. For the most part, it's been above 12. The one time it was below 12 was this right here, and it was only below 12 for a week, and then it skyrocketed up to 28. So 12 is a solid support level where more than likely it's not going to fall below, but if it does, it'll quickly shoot back up again, and then you'll be able to sell it for a profit. So once again, these dark green ones are the ones I'm confident in. I believe that they're close to historic floors, and that pretty much the premium should almost be completely, it's free money in your pocket basically. And if you do get stuck with the stock, historically you should only be stuck with it for less than a week and a half, and then the stock will go back up again and you'll be able to sell it for a profit. So these are the calls I'm confident in for the week. Guys, I hope you're paying attention to the market. I hope you learned something. If you do, please like, subscribe. I hope you guys have a great weekend. Thank you for watching the video.